Coming up on Market to Market.
There's a lot of cash out here right now, and usually when the farm sector has cash, they buy two things: iron and dirt.
High commodity prices and uncertain tax policy lead to booming farmland sales. And an uninvited guest wreaks havoc on the Mississippi River and its tributaries. Those stories and market analysis with Virgil Robinson next.
Funding for Market to Market is provided by DuPont Pioneer, working with growers to match the right product to the right acre. Science with service, delivering success. This is the Friday, November 23 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Mike Pearson. Public and private reports this week revealed dramatic improvement in America's beleaguered housing sector. According to the National Association of Realtors, sales of previously occupied homes rose 2.1% in October to a seasonally adjusted rate of 4.79 million. Excluding spikes in 2009 and 2010, when homebuyer tax credits temporarily boosted purchases, that's their best showing in 5 years. Builders broke new ground on homes last month at a seasonally adjusted annual rate of 894,000 units. That's a 3.6 gain from September, and it represents an 87% improvement from the recession low in 2009. Applications for building permits, a barometer of future construction, fell 2.7% from their 4-year high realized in September. But permits to build single-family homes rose to their highest level since 2008. And the National Association of Home Builders and Wells Fargo report their survey of builder confidence rose 5 points this month to its highest level since May of 2006, just before the housing bubble burst. While the housing market recovery still has a long way to go, it is helping support an economy facing a global slowdown and the looming threat of significant spending cuts and tax increases. Demand for farmland also is on the rise, especially in the Corn Belt, where, despite soaring prices, sales are booming. Paul Yeager explains.
10, 8, now 9. 10, 8, now 9, 9, what is it? 10, 10, 9, what is it? 11.
Steve Dykey and his sisters watched this week as the Iowa farm they grew up on went to the highest bidder. It was an emotional day, but one they knew eventually would arrive, and Dykey says it helped knowing that they had the blessing of their late father.
He said, sooner or later you'll sell the farm, but it's just property. You know, it's really easy to get sentimental about a family farm, you know, and let your heart drive, but maybe we should be thinking instead, but nonetheless, still a difficult decision.
Land sales are booming in rural America, where continued prospects for above-average commodity prices are whetting farmers' appetites to expand. One of the dozens of sales this week in Iowa featured this 163-acre plot in Butler County. Its agricultural value, commonly known as a Corn Suitability Rating, or CSR, was 75.3. That kind of quality draws a big crowd, but only a handful actually bid on the tract. Eventually, it sold for $12,500 an acre.
Sold the farm.
The auction was conducted by Omaha-based Farmers National Company. Believed to be the largest broker of agricultural land in the nation, Farmers National is on pace to sell $640 million in agricultural real estate sales this year. And Jeffrey Obrecht, who bills himself as the dirt dealer, says nearly 40% of the sales, some $250 million, will come from Iowa alone.
2011 was a good year. For our company, I was salesman of the year. I ran $24 million. And I'm thinking, hey, that's pretty good. Well, I'm salesman of the year again this year, but I run $56 million. I mean, that's wild.
While the drought of 2012 did curtail yields in Iowa, better than expected harvests in some areas put a little extra money in farmers' pockets, and the dirt dealer is more than happy to lighten their loads.
There's a lot of cash out here right now, and usually when the farm sector has cash, they buy two things: iron and dirt.
2012 has been an incredible year for the dirt dealer. He says that transactions are up more than 30% than last year, and it's been driven by a number of factors, but one leads the way.
Number one, interest rates. Historically low interest rates, demand, more land on the market than we've seen for a while. But even with that, the demand is still there. You know, a lot of times when you get an oversupply, the demand isn't there. But right now, to me, the demand is there, even though we have, I guess, technically an oversupply.
The threat of Washington failing to avert $500 billion in tax increases and $109 billion in spending cuts before the end of the year also is prompting some landowners to sell now. And Obrecht estimates 90% of the crowd at his auctions is farmers looking to expand their operation.
Probably the most interesting business I've ever been in. With the markets the way they are, I've never thought I would experience anything like we're experiencing. High land values, the demand, the aggressiveness of people, even with the drought, what that has done. So it's just very, very interesting right now.
The booming market for land is welcomed by sellers, but for many, the experience is bittersweet.
You know, I'm not doing cartwheels right now. You sold the family farm, and you got all those memories. As I come back to it, the decision was made, and we feel good about it at this point.
According to the Nature Conservancy, invasive aquatic species cost America's Great Lakes an estimated $500 million annually in lost tourist revenue alone. While numerous forms of invasive aquatic life threaten U.S. waterways, Asian carp appear to be public enemy number one, particularly in Illinois, where the uninvited guests are now the dominant fish in most major rivers. Since their diet is limited solely to plankton, they compete with native species for food. But some entrepreneurs want to make Asian carp part of the human diet. As Josh Bittner discovered last summer, while officials desperately try to eradicate the invaders, others say if you can't beat them, eat them.
During the summer, myriad outdoor opportunities are in full bloom across America. For boating enthusiasts, sunshine and rising temperatures present a chance to cut loose on the water. But for some Midwest mariners, the whir of a boat motor can cue a most unusual phenomenon. Asian carp, an invasive species capable of decimating native fish populations, have used the Mississippi River as a superhighway, threatening to infiltrate every nook and cranny of her tributaries. Bighead and silver, two of the 4 varieties of the Yangtze River natives, have become a major nuisance in the central U.S.
The silver carp are known for their ability to jump out of the water when they're spooked. Prop noise from a boat or even the hull noise of the boat splashing in the water can cause these fish to jump out of the water. It's a defense mechanism that the fish have to get away from danger. Folks have seen the videos of those fish jumping up into boats. People have been injured where a fish has jumped out of the water and crossed their path.
Imported to clean algae from Arkansas catfish farms in the 1970s, these malign fish, revered in Asian culture as symbols of hard work and perseverance, escaped, due to flooding, into nearby waterways that fed into the Mississippi River. Over the years, their numbers have grown into a massive horde.
The carp are prolific breeders. One female can hatch up to 4 million eggs per year. They eat constantly. They can double their weight in a week. There aren't any natural predators that eat them when they're small because they grow too fast.
Ironically, silver carp pose their greatest threat to people during their smaller juvenile stage of development. Biologists assure the fish are no longer prone to jump once they weigh over 10 pounds. Their diet, however, is another matter.
So this is a silver carp. They get much bigger than this. They filter the water for zooplankton, which is a critical food link for most of our native fish.
The Illinois River has borne the brunt of Asian carp, with the aquatic barbarians storming the gates of Lake Michigan via the Chicago Sanitary and Ship Canal, which connects the two bodies of water. Though the fish are known for spawning in rivers as opposed to lake environments, the federal government isn't willing to play that hunch. To tackle the issue nationwide, the Obama administration has appointed a carp czar of sorts in John Goss, former director of the Indiana Department of Natural Resources. Goss's own state has fielded similar threats in the Wabash River, which connects to Lake Erie. The centerpiece for deterrence is an electrical barrier in Chicago. A series of electrodes across the bottom of the canal send low-voltage electricity into the water. When fish approach the electrical field, they are repelled back downstream. Manufacturers and proponents insist the levels are safe for fish and humans, but standard warnings are in place.
The problem is you're not going to be able to engineer your way around a biological problem.
Dr. Timothy Leeds of Ames, Iowa, was a partner in one of the few early groups who'd had an entrepreneurial epiphany of how to deplete the infestation.
We initially had a plant set up in Havana, Illinois, and it was more of a show and smell plant than anything else. Take the carp in, process them, convince your neighbors that it doesn't reek.
Though the doctor was driven to succeed, the state of Illinois has been hit hard financially in recent years. Without additional state investment in the project, Leeds' company was unable to maintain operation.
Well, so we could close a hospital and fund your carp plant, or we could not fund your carp plant. So we got on the chopping block.
But downriver in Grafton, Illinois, another group of investors struck a deal to export 35 million pounds of Asian carp to China over the next 3 years. American Heartland Fish Processing is poised to boost the local economy by creating 35 processing plant jobs and throw commercial fishermen a lifeline by turning their problem into profit.
The fishing industry is dead most up and down the Mississippi. And now it's coming up in Missouri, and it's going to hit those tributaries also.
Further upstream, Dr. Leeds' own state of Iowa has seen its share of Asian carp.
We're constantly documenting the spread of Asian carp throughout the state. They're really prevalent in our larger river systems.
The record flooding in 2011 on the Missouri River, itself a Mississippi tributary, emboldened bighead and silver carp to venture into northwest Iowa, knocking on the door of Iowa's Great Lakes, a popular recreational destination. Practically a microcosm of the national struggle, the chain of 6 glacial lakes is connected to the Missouri via the Little Sioux River and Mill Creek at the Lower Gar Spillway. Asian carp were first landed in the lake chain in August 2011. A wave of stewardship promptly followed in their wake.
We basically raised $700,000 in about 3 months.
Fearing a ruined regional economy, citizens and local business owners petitioned the Iowa legislature to appropriate money for a blockade. Political gridlock kept that option off the table, though the Iowa Department of Natural Resources was itself able to allocate more funds. The final piece of the puzzle came in a partnership with the state of Minnesota. The Land of 10,000 Lakes had already approved a $10 million multi-pronged approach to attacking the problem of invasive species within its own borders. Tacking on to Iowa's in-progress solution became a way to cut costs while protecting the lakes and streams in the two states' shared watershed from Asian carp.
We don't think that these fish can reproduce in a natural lake. So if that's the only way for their numbers to increase is during these flood events, then putting some type of a barrier in place on the downstream side of the Iowa Great Lakes is one way that would prevent them from moving upstream.
I guess my thought on the electrical barrier is it's kind of like chicken soup. I'm not sure that it's going to help, but it certainly won't hurt.
Though viewed by many as a scourge, niche markets do exist for carp. Stoller Fisheries in nearby Spirit Lake, Iowa, has been processing freshwater rough fish since 1932.
We're something like a slaughterhouse for beef or cattle. They're reduced to the edible parts and the inedible parts. Most of it is mechanically deboned, so it looks like hamburger when it comes out. The product is very acceptable for making fish sticks, fish patties. Our primary customers are in the kosher industry. They're making a Jewish traditional product called gefilte fish.
Should bighead or silver carp gain a foothold in Iowa's Great Lakes, Stoller assures they are set up to handle an onslaught.
We are set up. In fact, we've been processing Asian carp from the Illinois area for probably 5 or 6 years. If there were fish in these lakes, we would process them, yes, but we're not welcoming them into the area.
On the positive side, silver carp and bighead carp are very good to eat. The common carp have been here since the 1880s. They're mucking up at the bottom. These don't. They're eating the same thing that really salmon eats.
What is the other choice for carp? In Asia, they eat 6 times as much fish as we do, and carp for them is a delicacy. If we could get the carp back to Asia, there's a major market for the fish there. The only thing that's ever been shown to help with carp is to overfish them. But you can't overfish them if you don't have an end market. So we're trying to create an end market from scratch.
For Market to Market, I'm Josh Bittner.
Next, the Market to Market Report.
We're producing our show on Wednesday this week to give the people who bring you Market to Market an opportunity to gather with family and friends over the extended Thanksgiving weekend. And during the abbreviated week, grain prices are on the rise. As of Wednesday's close, December wheat gained 7 cents, while the nearby corn contract moved 14 cents higher. Soybeans also rallied this week as the January contract settled Wednesday with a 3-day gain of 25 cents. Nearby meal prices followed suit, improving by more than $3 per ton. In the softs, cotton was the only major commodity that lost ground during the abbreviated trading week, as the December contract moved 35 cents lower per hundredweight. In the dairy market, December Class 3 milk gained 15 cents, while the deferred contract moved 25 cents higher. Over in livestock, December cattle rallied nearly $2. Nearby feeders improved by $1.75, and the December lean hog contract posted a weekly gain of $1.43. In the financials, the euro gained 79 basis points against the dollar. Crude oil gained 46 cents per barrel. COMEX gold advanced by $13.50 per ounce, and the Goldman Sachs Commodity Index rose nearly 10 points to settle at 645.50. Here now to lend us his insight on these and other trends is one of our regular market analysts, Virgil Robinson. Virgil, welcome back.
Thank you, Mike. Happy holiday.
And a happy holiday to you as well. Wanted to start off with something that's been on the news all over since the election, and that's the fiscal cliff that's coming up. What are your thoughts on that? How is that going to affect the market as we go forward?
I'm reminded of a quote from a brilliant scholar and statesman, Sir Winston Churchill, who stated, "Americans will always do what's right after they've exhausted all other possibilities." The day has come. I think there'll be either an extension of the deadlines agreed upon by this lame duck Congress and the president, and make note I said agree, okay, or if you believe in miracles, perhaps some resolution. So I think it's time now to kind of put that fear at a midpoint in the process, the mind thought process here, Mike. That's old news. I think we're going to move beyond that. There are pretty good signs of economic recovery in China. The Purchasing Managers Index for each of the last 3 months has improved and is now in positive territory. So it appears to me the policy by the Central Bank of China has worked. And there is a precedent there. They've been pretty good at micromanaging their economy. So I think that economy, as measured by exports in each of the last 3 or 4 months, has improved. So improvement there. Some of the sectors here in the U.S. that perhaps have gone unnoticed that are improving, at least in my opinion, the consumer sector. Consumer confidence is as high as it's been in years. Housing, transportation, and chemicals. So we have some positive things, I think, going on. An agreement to extend the deadline, which would include the Bush tax cuts, which would include the 2% payroll tax cut, as well as unemployment insurance benefits, I think are likely to move forward in 2013. I think there are some positive things taking shape here.
All right, and it's interesting you bring that on. We've had a pretty good week in the commodities, at least so far here to Wednesday. Is that mindset trading over? Like, where's wheat headed here in the future?
Price-wise, a couple of things that need to be noted. The condition of the winter wheat crop here in the United States, at least as measured by history, not particularly good. Now, there isn't a real strong correlation between early percent of good and excellent and final yield. A lot can develop in the spring of the year, but clearly that underpins the market in my mind. We're still trying here to quantify quality and quantity out of the Black Sea region. Some issues in Argentina, some issues in Australia. I think the market kind of limps along here. I think the basis will continue to strengthen, Mike. And opportunities, 25 to 50 cent price rallies, I think will develop in 2013, the first quarter of 2013, I'd use that to do one, either sell some cash or buy a put.
All right, and how about in the corn market? We've seen a little bit of a move up this week. Is that going to continue?
You know, I like the corn market, the fundamentals of the corn market. Couple things there. We cannot divorce ourselves from the concern weather-wise or drought-wise here in the U.S. It's not likely that issue is going to be resolved through the winter. Having said that, please understand there are other headwinds associated with the drought. The level of the Mississippi River and our ability to navigate. Should exports increase, and I sense and believe they will in the second half of this crop year, as the spread between, for example, FOB New Orleans corn and FOB Paranagua or Santos corn, that spread is narrowed pretty dramatically for January and February, which would imply the supply of grain down there has in fact dwindled. So I expect the USDA to address the export issue in their up-and-coming WASDE report. Should they leave that figure unchanged, they too are obviously expecting a pretty significant increase in export sales the second half of the crop year.
All right.
I think corn is firmly underpinned. If you're not in need of cash, and please understand, farmers' balance sheets are the strongest they've been in 50 years, at least row crop farmers. It's going to be hard to source corn the balance of this crop year.
All right, and how about beans? It's a tight story there as well.
Yeah, similar, although at this point in time, a couple of things have happened since you and I last talked 2 months ago to the day. One, the size of the U.S. crop grew larger, okay, in late crop year development. Secondly, the projected size of the crop in South America has also grown larger to record proportions. And as a result of that, the market has had to absorb a lot of selling from that region of the world, which is consummated by a short futures sale in Chicago. Now, should there be any weather concern, and in my 40 years, I have never witnessed a growing season in South America where there hasn't been at least one weather concern.
So there's potential there that we might see another rally in the bean market.
Yes, and in that same context, Mike, since we last talked, futures are down a couple of dollars, but cash is only down $1.70 or thereabouts. The basis continues to firm. Processing margins here in the U.S. are much better today than they were yet 1 year ago. So the demand for beans, at least as measured by that indicator, remains strong.
All right. Another report that came out today I was hoping to get your thoughts on was the cold storage report. Where do you see that pointing us here in the livestock?
A couple things. Again, the aggregate of red meat grew year over year, not surprisingly, Mike. We've had a flush of pork driven by a pretty serious sow slaughter. Now, in each of the last 2 or 3 weeks, that's been slowing down. So I think that flush of pork has hit the marketplace. I expect that to slow down over the course of the next several weeks. In addition to that, we have a major supply shortage looming in the cattle market, both the availability of replacement cattle as well as the availability of cattle on feed. So, consumer, prepare yourself. Now, one of the headwinds that we need to also mention here in our discussion about red meat and price prospects, which I am bullish on, is the fact that Japan, one of our major importers, is experiencing a pretty serious recession. And that's likely to continue moving forward. So please understand, they are a big beef and pork importer. That's a headwind we need to acknowledge.
And is that a headwind that hasn't been priced into the market? I believe feeders and live cattle were both up this week so far. Is that going to continue until we get a handle on that, or?
Mike, I wish I could tell you without hesitation that the trend in the marketplace will continue higher. There'll be all kinds of periods of moving higher, moving lower. I guess at this point, I am reluctant to sell futures against live cattle production. I would be more inclined, just as an insurance tactic, to look at some type of put strategy. At least you can budget for that.
You bet, and that's important to help contain your costs. Now, looking at hogs, you mentioned the major supply of pork probably already hit the market. What do you see that doing to hog futures as we roll through the end of this year and into 2013?
Mike, I think the liquidation phase, the sow liquidation phase, has subsided. So that doesn't mean there won't be live hogs yet available to the market. There will be, given the hog and pig crop report, the recent hog and pig crop report. But I sense, as mentioned earlier, I'm pretty bullish on cattle prices, and clearly that'll have some effect on pork. All you need to do is look at the forwards or the futures contracts in the forward months in pork and sense that, hey, we're at life of contract highs. Clearly the market senses a shortage of that product as we move into 2013. My best idea tonight with respect to that market, here again, I'm inclined to look at put strategies, create some kind of a safety net. Those who have a stronger balance sheet, perhaps take their chances and do little or nothing moving forward here.
All right. Now, one thing that we've talked about a little bit is your view that the economy is going to strengthen. We've seen a lot of encouraging things. Earlier on the show, we saw the video of land prices increasing. How long is that going to continue for folks in the ag sector, these rising farmland prices, do you think?
Mike, as long as commodity prices remain firm, and at this point I think they will, and as mentioned by your guest, as long as interest rates remain at or near current levels, and the Fed Open Market Committee has verbally stated we will keep these low at least through 2014, I sense maybe a plateau in values in some geographies, but at present I don't sense a collapse.
And probably continuing at least through that 2014 marker.
2013, 2014, in my mind, appear pretty solid regarding land values.
All right. Well, thank you so much, Virgil.
My pleasure.
Really appreciate having you here, and I hope you have a wonderful Thanksgiving.
Thank you.
That wraps up this edition of Market to Market. But if you'd like more information from Virgil on where these markets just may be headed, visit the Market Plus page at our website. You'll find expanded market analysis, audio podcasts, and streaming video of our program, as well as links to our Twitter feed and Facebook account, all free at the Market to Market website. Be sure to join us next week when we'll examine the outlook for agricultural trade. Until then, thanks for watching. I'm Mike Pearson. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Funding for Market to Market is provided by DuPont Pioneer, working with growers to match the right product to the right acre. Science with service, delivering success.